Joining us now to discuss his outlook on the Bitcoin market is Jason Pagoulatos. He is Delphi Digital Markets Associate. Morning.
Hi, thanks for having me.
Good afternoon, rather. Thank you for being here, Jason. It's a long
Thanks for
day.
having me.
It might as well. It's a morning somewhere. Okay.
Yeah.
We just showed this chart here that of course that the hodlers are starting to not hodl as much as they hodled. Say that 10 times fast. And it seems that the markets are under pressure because of the fallout from FTX. And of course, there's a lot of contagion fear. Any bright spots for all those people who are still holding on?
Yeah, I mean, like, generally, I think the long-term outlook for at least like Bitcoin, Ethereum, and DeFi hasn't really changed, right? For the majority of the year, it's been a really tough macro environment. And then for the last 6 months, crypto's had some pretty crypto native events like the Luna Terra collapse, 3AC blow up. And now we're seeing, seems like this is kind of a follow-on knock-on effect of that, which is kind of like when you say like, oh, you have these like long-term holders, 6+ months of holding time selling it, it's not too surprising, right? But these are also oftentimes like the first signs of like real capitulation in markets, right? But just because you have this long-term selling doesn't mean you have the marginal buyer ready yet to come back into markets. Obviously, with all the uncertainty, the contagion, it's not the prime time for a lot of people to put more risk on at the moment.
Yeah, I want to ask you about those potential buyers, retail and institutional. Are they spooked by all of this? Are they looking at this and saying, you know what, this isn't for me right now? This is too much shenanigans for me.
I think some people probably, like, if we're being completely honest here, like this was a big breach in trust generally within the industry, right? And it's kind of ironic, right? All of the things that crypto and decentralized systems are trying to build protections against and improvements on fell victim to the same kind of centralized tendencies that financial markets have had over the last many decades, right? As the previous guest mentioned, you had Enron, you had Madoff, you had a bunch of different things, right? And those were all breaches of centralized trust, right? And yeah, like it probably does slow investment in the short to medium term, but I don't think it kills the industry by any means. It's obviously a huge setback, and there's no sugarcoating that, but I think retail will be back, and I think institutions will still be here. I just think maybe the deployment of capital might be at a slower rate in the short to medium term than people had previously hoped or expected to.
Which one of the two you think will come back first? You think it'll be retail or institutional?
I don't think institutions are going to leave entirely, right? Because people who weren't exposed and still like the fundamental value propositions of a lot of the major protocols will probably be looking at the fallout and contagion from this as maybe like the first time to get in as terms of like value buyers, so to speak, right? Like they're like, these prices have come down so much for some of the really good projects that like haven't really had any fundamental differences between now and 6 months ago, minus all of the market kind of falling apart. So they might look at these as like decent value levels over the next 3, 6, 12 months.
We're ending we're coming to the end of the calendar, and of course you can see a lot of tax selling. If you bought at 68 earlier this year, or whatever, you kind of need to get your losses so you could try to avoid paying taxes. So do you think where do you see the support level coming up?
Right. Yeah, no, that's a good point. So obviously, we still don't know the full fallout of FTX. There's a bunch of other things that could definitely go wrong because of this, and we still don't know who's fully exposed, which projects had treasury reserves stuck on FTX. There's a whole catalog of things that we still don't know. And then you just brought up a good point of tax loss harvesting. It's a great year to do some tax loss harvesting. So yeah, it's hard to see like a great crypto catalyst into the end of the year. And like if these levels break down from here, like it makes sense for me to look at, like, if I go back to last cycle, like where did the vast majority of transactions occur? Where's like the vast majority of what other people call market structure, volume, all ways of saying sort of the same thing. And that's in that like 9 to 12K area. And that's where it spent the majority of its time. The most transactions and volume took place there. So that's where you'd expect like what people would call like a bounce, or like a value level that people can tangibly look at and be like, okay, like that's only like 30%, whatever it is from here. Like what's another 30% after we just dropped from 21K to 16, right? So like maybe something like 9 to 12 is where I'm looking.
Well, 9 to 12. Let's see how it goes. The year is only a few weeks away. The end of the year is only a few weeks away, and a lot of people want to avoid paying those taxes. So thank you very much, Jason. That was Jason Pagoulatos of Delphi Digital.